Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Red Dog Redler on the line, Chief Strategist at T3 Live and T3 Trading Group. Are you well rested from the weekend and ready for a busy week of trading action?
Yeah, I actually feel a little well rested. I didn't do a 20-mile run on Sunday, so my feet are a little sore. But other than that, I'm ready to rumble. I think this week could be a very interesting week with lots of opportunities.
You got to get in the pool, man. You know, it's not hard on your feet like that. But anyways, we just had Carl Schneider on the line, and he's a chief market strategist with Garden State Securities and longtime bull. And he's kind of throwing in the towel here at these levels on the long term direction of the market. Now, I know you like to let the charts kind of dictate your actions here, but we'll just pull up the spider chart here. And are you sharing that sentiment, or do you think we still got another rip roaring rally left in us?
So now he's a longer-term macro player,
Yeah.
that gentleman you're
Yep.
talking about?
Yep.
That's interesting because, our sweet spot tends to be the active intermediate spot, and that spot did break, in late August. If you look at the chart of the spiders, you can see, I have a micro version of it, but when we broke 204, 206 back in late August, that's when we broke below every moving average and momentum was lost. So now the market's trying to prove that for the longer-term players, the more macro players, is there more downside, and is this one going to take a lot longer than the last few corrections? As of now, it kind of feels that way. But I don't know if, I guess you could say the highs of the year are in, but, from right where we are now, can we close 100 handles higher and still make money trading? Maybe, and then still head lower next year. So I think, the thought process for traders is how to maneuver this lower range and make some money in the last quarter, especially if you didn't get hurt in that downside move, since we are about 10% or so off the highs. So to make a long story short, look at the chart of the spiders there. If we're going to go lower, you have last week's low of 190.56. That's what I think traders should be writing down. And then you also have Friday's low of 191.81, which we're kind of flirting with now. So in order to retest those August 24th lows, we need to close below 190.56. So at this point, that's your pivot support. You have where we failed on Friday, which was in the 195. And I think, as far as the spiders, that's what's going to be important, the first few days of this week.
And moving into different sectors that, you always have your leaders, you always have your laggards. For the longest time, that IBB was just everyone's darling here. Just had some actions by, I don't know if I get his name right, Martin Shkreli, raising the price of the drug, Hillary Clinton getting involved here. So you had the darling sector, the biotech sector, definitely led the market up to all-time highs, and now that's kind of in full retreat here. What are you looking at in the IBB?
Well, if you remember last week on Thursday, we had the reversal on the lows first in the market. So that actually got me long. I was long Thursday into Friday, but then
Nice.
on Friday, when the S&P was still up, 13 handles, 14 handles, you had the bios go red, and then the bios break below Thursday's low. So right there, traders like, ooh, the bios, which have led us lower with the head and shoulders top pattern, with the breaking of its ascending channel when Hillary spoke around 351 in the IBBs, gave you at least some clues to, okay, have some stops in, because it, dragged down Google, it dragged down Amazon, it dragged down, most, growth areas, because that's what bios tend to be. So anyway, that's what caused, Friday's little failure. So I think moving forward this week, if the overall market's going to make another volatile move to test the August 24th lows, you now have 304.50 in the IBBs. That's Friday's low. It's going to have to break below that and hold below that to then give you clues that we're in motion for that. I think, it's down a lot last week, so maybe you get a little bit of back and forth around that pivot where you could maybe make a little bit of money with a red dog reversal or not. That's the only way I would trade the bios. A lot of traders on Friday, they tried to do maybe a cost average approach, thinking that it was going to bounce, and they got their clocks clean. In a market that's in a retreat, you go a level versus a level. You do not, just open up and start cost averaging lower, because you might not be able to stay solvent when you're finally right. And things are dangerous right now.
Okay. All right, let's move on to some individual issues here. And the one we have to talk about, of course, to start, is Apple. gave a little boost to the market. If there's one reason that we're off that 902 and a quarter, it's because of Apple, and they came out with some iPhone sales figures. I guess better than expected here. We're rallying it. We are green by 9 cents, 114.80. Are you biting on this move here in Apple and the move up in the S&Ps?
I'm going to wait on Apple. I was long Apple on Thursday into Friday, and I didn't take it over the weekend just because I wasn't sure what the numbers were going to be. It is one of the few stocks that are still somewhat acting well. So, if the bears want to get traction today to the downside, Apple's going to have to, give way and not be green and not go up. So I think Apple will be a clue on what type of downside or what type of day we have today. If Apple is up 10 cents and goes up $1.50, and because they can't bring it in, I'm sure, the tech might hold in there. We could potentially go green in the markets. If all of a sudden Apple's up a dime and then by 11:30 it's down a buck and change, then you have to be careful that perhaps that weekly pivot in the spiders at 190.56 could break. So I think Apple could be a really good, leading indicator today. I'm not going to just buy it because it's up a dime. I'm going to wait and kind of see, how the dust settles here and then overlay that with the overall movement in the market here.
What do you mean by what's your time frame for that? I mean, we're green right now by 13 cents, 114.84. Are you talking the first 5 minutes, for 15 minutes, half hour, lunchtime? I mean, because that's, everything about trading is timing. And, what would you look for here? And I mean, do you want to see it up 20, 30 cents or you want to see it up a stick?
Well, what you want to see is if all of a sudden the market opens and Apple's, just say up 10 cents and they bring the S&P in, 5, 6, 7 more handles and they can't bring Apple in, then maybe I buy Apple. Okay. And then it bounces and drags the market up. If Apple's up, 10, 20 cents, then they try and rally the S&Ps in the first 15 minutes and there's no traction that's being sold. Chances are, on that bounce attempt, if it fails, then Apple's going to get hit. So, you can't give a concrete time on when you're going to enter, but in the first 5, 15, 30 minutes, if you look at the action, it could tell you a little bit more what it might want to do. So I feel like that's going to be my barometer. I'm not going to give it a time frame on when I'm going to enter it or when I might even short it. But I'll see if it does show relative strength, and it's beating down the market and they can't beat down Apple, chances are the market's not going to fall apart today.
All right, so let's go into some other high beta tech here. Amazon, ugly candle on Friday.
Yes. Amazon, I feel like, is a tiny bit better than Google, but it's still hard to trust. On Friday, it opened up with the market and then sold down all day, and first engulfing candle in a while. It's one of the few chosen ones that still look decent. It's still above, the 21-day moving average, but as you see what happened when it started to break on August 20th and just gave away quickly, traders don't want to be caught if that happens again. So, at this point, take trades in Amazon. It's still in the game as a stronger stock. For the week, though, I would watch this, 520 to 518 area. If that 518, 520 area can't hold, chances are technology could be pressured. But it's something to watch. If you can't trade it, at least watch it to see. Because, on Friday, with the buy, it was actually Google, was the first to go red. And I remember people saying, oh, look at Google red. It's down $2. And that gave clues that more weakness could settle in. And then look at the size of that wide range bar in Google. So gave clues that the market's not going to hold up. And that's what helped get me out of my Apple, my Facebook, or even, to have my stops and other things. So anyway, that engulfing candle in Google is pretty ugly. And now, I would think 525, sorry, not 525, 625 is the next level to watch. But overall, nothing seems to be in a rush to go higher. Just a matter of can they hold up to stay in the game when the market wants to start acting better.
How about Netflix here? Came off the high, been consolidating here. I think it did have some positive news last week. I can't remember what it was on Thursday. Got the pop and really didn't give it much back on Friday here. Just a trading range here in Netflix, or you have a strong opinion going one way or another?
I think strong opinions right now can get you in trouble. But
you know what they say, opinions are like... You've heard that saying, right? Opinions are... I can't say it on the air.
No, I gotcha.
Okay.
But, Thursday, actually, I think they came out with news with Oculus, how they were going to be able to stream shows into the virtual format, which was positive. But more importantly on Thursday, if you remember, when the market was getting beat up and the S&Ps were making new lows, Netflix was green. And I know that, for me, was a sign to be long Netflix, which I was. And it wound up being a good trade and actually gave you a little bit of follow-through on Friday. Day-and-a-half moves are really what's been going on. You haven't been able to stay more than a day and a quarter, day and a half, both directions while we've been in this range. So it did hold up a little bit better on Friday. I'm not sure what it's doing right now, if it's off a little bit. I'll look to see if we can get back above 101.57-ish, which is Friday's low, and hold above that. That would show me that it's acting a little bit better. And then if the market wants to bounce, you then have that basic downtrend that's a little bit closer to 106 to see if anything could be bought on strength, because buying things on strength has not been a winning strategy as we've been in this down tape. Only the RDRs in the hole or brief day-and-a-half type movement. So we'll see if that could change.
Tesla here, I've been holding up pretty well here, right near the top of its trading range here. Can't really say this one's giving me a great feeling on the short side. Doesn't mean I won't short it here, but just kind of hanging out here near the upper end of its range, really since the flash crash. Wow, look at the support level. Red Dog, have you ever seen Tesla make 1, 2, 3, like 4 or 5 lows and right in the same area, 256? Do you see that?
Yeah, at least that's good for us. It means we have points of reference and it's tight. Someone's in there buying. And you had look at the candle though on Friday. That to me says, okay, at least be a little cautious. Doesn't mean you have to be, all in short, but yeah, we haven't seen a wide range bar candle like that in a long time. So, and again, for continuity purposes, on Thursday, it was one of the first to go green, and then it opened up $3 on Friday. So that day-and-a-half trade has been working lately, where if things close strong, they open up the next day. Things close weak, they open down. And that's how traders can make money. If you remember, the first 7 months, you close strong, you open up weak, you close weak, you open up strong, all the misdirectional moves, and that's what distribution was. At least now, you're getting a little bit of continuity. So for Tesla now, it has been acting well. It broke that mini downtrend or that descending channel above 250, 450, and it's still above it. So I would say if you're swing trading Tesla, and it's been hard to be in any swing trades long, make sure it holds 254 to 256. If that gives way, risk off happens fast in these higher valuation type names.
Hey, we got about 1 minute left here, Scott, and I just want to get your quick take overall on the financials here. We don't have to go into individual issues, but interest rates are going up. It's supposed to be good for the financials here. Goldman Sachs, JP Morgan, Bank of America, whatnot. I mean, in a weak market, I have trouble buying anything here. Do you think that this potential of interest rates going up, that's going to be, the strength, the strong sector here, the financials?
Well, they've been actually one of the weakest sectors in the past month. They bid them up thinking that we would get a lift off, and when it didn't happen, they got sold that Thursday fast. But on Friday, with Yellen's tiny bit of a hawkish tone, they held up better. So with them down with the futures today, I'm going to look to see if they can go green. That's going to be another clue. If the Bears want to retest the S&P back at the August 24th lows, they're going to have to bring some weakness back in the banks. And if they can't, then chances are it's going to be more choppy action in this range. But I think the banks today are worth a look just for a tactical trade to go green. And if they, like I was in JP Morgan on Friday, it was one of the few stocks they didn't get stopped out of while everything else kind of, wound up getting hurt. So I would look at the banks just maybe today, tomorrow. And if they could hold above yesterday's and last week's lows, perhaps there's a better bounce coming and people believe a little bit more of higher rates. But at this point, people don't really believe in higher rates yet, and that's why the banks have not been, acting as well as when they believed in higher rates in the first part of the year.
We've been on the line with Scott Redler, Chief Strategist at T3 Live and T3 Trading Group, giving us a well-rounded look at the market. Scott, we appreciate talking to you every Monday. We'll talk to you again next week.
Sounds good. Thanks for having me.